Did you know that you can build significant wealth with just 3 investment funds? That's right, no need for dozens of complex strategies or endless monitoring. I'll show you how to simplify your financial journey and grow your wealth with a strategy so easy you'll wonder why you didn't start sooner. Welcome back to the channel. If you're new here, our mission is to help you take control of your finances. Today, we are looking into one of the simplest, most effective investment strategies, the 3-fund portfolio. I'll show you what this looks like in the real world. It's all about simplicity, diversification, and building wealth over time. Before we dig into the details, hit the like button to support our growing channel. The 3-fund portfolio is a game changer. It's based on the principles of John Bogle, the founder of Vanguard Group, and widely embraced by the investment community, including the Bogleheads. Here's what it includes. Number 1, a domestic total stock market index fund. This fund gives you exposure to the entire US stock market, large caps, mid caps, and small caps. You're essentially owning a piece of the American economy. It's perfect for capturing long-term growth potential. For example, Vanguard VTI or Fidelity's FZROX are great options here. Over the past few decades, the US stock market has delivered average annual returns of about 8 to 10%. That's some serious growth. The strategy also includes an international total stock market index fund. Why stop at the US? The International Stock Market Index Fund gives you exposure to companies outside the United States, like Samsung in South Korea or Nestle in Switzerland. This adds global diversification, reducing the risk of being too reliant on one country's economy. Funds like Vanguard VXUS or Fidelity's FTIHX are excellent choices. And with emerging markets booming, this fund could offer growth that complements your domestic holdings. Last but not least, the bond fund. This is your stability, your anchor. Bonds tend to be less volatile than stocks, providing a cushion during market downturns. They also generate income through interest. Options like Vanguard's BND or iShares AGG are solid picks. As you approach retirement, you can increase your allocations to bonds to preserve wealth while still earning. So what does this strategy look like in action? Let's say you start with an investment of $10,000 and invest $500 a month into these 3 funds. With an average annual return of 7%, after 30 years, you'd have over $600,000. If the market does even better, you could be looking at nearly $1 million. That's the power of steady investing combined with diversification. And the best part, the portfolio requires almost no maintenance. Rebalancing once a year is enough to keep your investments aligned with your goals. The 3-fund portfolio consists of a domestic stock fund for growth, an international stock fund for global diversification, and a bond fund for stability. It's simple, effective, and proven to work over the long term. You don't need complexity to build wealth, just consistency and patience. Thanks for watching. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more financial tips. What do you think of the 3-fund portfolio? Let me know in the comments below. And if you're ready to learn more about building a low-cost, high-growth portfolio, check out this video next. Until next time, stay financially savvy. See you in the next video.